Let's get down to the New York Stock Exchange. Jobless claims doesn't have a symbol. I mean, when we talk to you, Jim, it's hard to never talk about macro things, you know, but it does.
That's right.
It does matter, I think. Is this the first, and it's crazy because it's bad news because more people need unemployment insurance, but is this the first glimmer of hope of some maybe cooling of the labor market or not yet? We'll know tomorrow better.
I think so, coupled with that excellent interview you had with Bank of America and what they're showing in terms of spend. Spend just seems to be now reduced to just travel. And so maybe people are starting to get worried, Joe. It makes sense, right? I mean, we're really at a month that February may have been a tale of 2 months, right? It might have been the beginning, came in very strong out of January, and then things must have cooled. And maybe that's what, maybe Powell finally set us up to jawbone, and we get a number that's not red hot. Well, and and a lot of people caught offsides.
Yeah, and Jeremy Siegel, people love him. Some people think he's, just always bullish, and he's very. If he's anything, he's certainly very passionate about what he believes. But the way he summed it up to me was, if we really are trying to solve the supply chain inflation problem that can't be solved by hurting demand or by destroying demand, that would be a tragedy to put a lot of people out of work if that doesn't address the issue itself. And I hope that, I mean, the Fed must consider that. They're a bunch of smart people.
Oh, I think so.
Yeah.
But Professor Siegel says some things that should be said. I mean, I wish that Powell would be actually at this point a little more measured, talk about some of the things that are working. But he's trying to, he's setting us up, jawboning us. I think also, if you're one of these big companies that have raised prices for everything, you got to start listening to what the Fed says. Maybe you have to cut prices. That'd be the last thing that'll happen, but that's going to happen. But I'm watching very closely what's going on with Silicon Valley Bank and what's going on with Silvergate, and just saying, okay, we see there's something cracking there. And I'm watching what's happening with office REITs. There's something cracking there. So there are real cracks now. And I think that Powell has to recognize, wait a second, these cracks could be severe.
So you think 25?
I don't want to scare anybody.
You think 25, or I guess we can't say.
Depends on tomorrow.
PPI, CPI.
Jim, that's pretty interesting. Office REITs. What if that is one of the forerunners and one of the, really big problems that doesn't go away, doesn't get swept out?
Yeah, look. We act as if SL Green and Vornado are companies that aren't well run. They're very well run. We act as if WeWork is a $9 billion joke, but it's $9 billion. And it was. This stuff is real and it's big, and we only see the public ones. So I'm looking at, I think, office real estate and crypto, because that's what did in Silvergate. But then the Silicon Valley Bank. This is about IPOs that didn't occur and investors that are trapped, and about executives who lent against stock that doesn't exist. So these are real cracks, and that number this morning is another crack. So be careful what we wish for, Jay Powell.
The Silvergate thing is so interesting. Silvergate thing is so interesting as a bank because it's kind of an old-fashioned. It's an old-fashioned bank run.
That's a run. That's a run. Silicon Valley Bank, much more nuanced, but very, very important. Because look, we have no IPOs. These companies, people who work at these companies, they went to Silicon Valley Bank. Silicon Valley lent them money because they wanted the IPOs. And now there's no IPOs, and they need the money, and they're fluid because they put their money in 3-year notes, which seemed like pretty safe stuff. They lost a fortune.
They were borrowing long.
Just lost a fortune.